Picture a man worth $10 billion. Every year, he spends $50 million on yachts, jets, and mansions. And yet, for 8 straight years, he hasn't paid a single dollar of income tax. He didn't run. He didn't hide. He used a 3-word formula. Buy, borrow, die. Let's break it down. Step 1 is to buy, but not the way most people buy. The rich don't chase a paycheck. They buy assets, stocks, businesses, real estate. Things that quietly grow over time. Step 2 is to borrow. Now, an ordinary person would sell their stock to get cash. And the moment they sell, the tax bill arrives. But the wealthy never sell. Instead, they walk into a bank. They offer their $10 billion in stock as collateral. And the bank hands them a $1 billion loan. Here's the trick. A loan is not income. Borrowing against your assets doesn't trigger a tax. So they live on borrowed money, and the assets stay untouched. 0 tax. Then comes the final step. Die. Normally, selling an asset triggers a 20% capital gains tax. But in the United States, something strange happens at death. When the owner passes away, the heirs receive the assets at today's market price. It's called step up in basis, and it wipes out every dollar of gain that came before. So if a father built up $5 billion in profit, his son inherits it all, owing nothing on that growth. That's level 1. But there's a second level. Change your address. Live in a high-tax country, and your global income is on the table. So the ultra-wealthy simply move. Take Monaco. 0 income tax. 0 capital gains tax. 0 wealth tax. But it isn't easy. You need a bank deposit of $550,000. You need a real home, and you must physically live there 183 days a year. Then there's Dubai, ranked the #1 tax-free country on earth. But posting a few photos won't fool anyone. Real residency means real substance. A real business, a real home, a real bank. And finally, the Cayman Islands. No personal income tax, no corporate tax, no capital gains tax. The perfect home for funds and quiet wealth. Put it together, and the picture is clear. A house in Monaco, a company in Dubai, a fund in the Caymans, and buy, borrow, die, layered on top. Now, here's the part that matters for you. You don't need $10 billion to learn from this. Lesson 1. Shift from income to ownership. Earn $100,000 in salary, and 30 to 50% vanishes in taxes right away. But assets grow tax-free until you sell, so invest 20 to 30% of what you earn. And don't rush to cash out. Lesson 2. Know the difference between good debt and bad debt. Borrowing for a new iPhone drains your wealth. Borrowing against a fund or a business to build income, that's the tiny legal version of the billionaire's game. Lesson 3. Understand residency for real. You don't have to move to Monaco. But remote founders and freelancers can ask a CPA about legal paths, because true residency is built on substance, not just counting days. In the end, the truth is simple. The wealthy don't evade taxes. They understand the system. Most people work for money and get taxed. The rich own assets and make money work for them. Rich people don't just earn money. They understand the code. This video is for education only, not tax advice.